Are you ready to start investing your money? Well, the first thing you need to think about are the risks. And according to the folks at Bienville Capital, there are definitely some. And today, Emmett Dupas III and Dylan Hoon are here to talk about investing versus speculation and how we all could get started in investing. Welcome, gentlemen.
Good to see you.
Good to see you all as well. Okay, so I'm very interested in this conversation because I want to be a millionaire. You all know that. Okay, how do we know the difference between investing and speculation? Let's start with what both of them are.
Yeah, yes, Malik, first, when you're looking at investment, I think the most important concept to understand is risk. How much am I putting at risk here? When most people think about investments, really the first thought that kind of comes to your mind are returns. How much am I going to make off this investment? So thinking about where you're going to spend your cash on or after you make a wise investment choice is the fun part about investing. You know, always puts a smile on your face when you see your balances increase. But the more important aspect of being successful is really properly evaluating the risk side of the equation. Basically, all investments should be considered on a spectrum of lower the risk, the lower the reward, the higher the risk, the potential for the higher the reward. The key to really finding out where you are on the spectrum for a given investment and making sure you're going to be compensated for that risk. It's really understanding what are my objectives and what am I trying to do here.
And that's what I find so hard about investing, because it's like, I'm like, yes, I've made this certain amount of money. I'm ready to invest it, but I'm always afraid that, the risks are higher than the rewards. So Dylan, I want to bring you in on this conversation. How do we define the risk?
So, Malik, I believe there isn't necessarily one way to look at risk. It really depends on the type of investment, the holding period, the particulars of the person who's investing. When we're talking about publicly traded securities, such as stocks, ETFs, bonds, risk is often defined as volatility, which is just a measure of how much the price of something moves up and down. If you're putting together a portfolio for retirement or you're in retirement, maybe you define risk as a chance that your strategy doesn't meet your goals. Some people define risk as the permanent loss of capital. So if I have an investment, what's the chance that maybe I don't get some or all my principal back? Risk could be something completely different. Maybe you bought a rental property and you define the risk as the ability of those rental payments to cover your mortgage. The important concept here for investing is first to define your risk and to make sure you link that risk with your expected returns.
Now, when we're talking about risk, so obviously we're talking about more than just money here. And, one of your examples is knowing what the type of investment is. What are some of the different types of investment? Because can I invest in a restaurant or can I invest in a new line of coffee? What are some of the different types?
There's really a huge universe of investment opportunities, everywhere from what you're talking about, restaurants to publicly traded securities to private investments. There's a whole gamut of what you can do. It's really about finding the investments that meet your objectives and then combining them in a way that helps your portfolio reach the goals that you need to, given a certain level of risk tolerance.
Very interesting. So at the end of the day, how do I know, Emmett, if I'm investing or just speculating here?
Well, I don't believe that there's really a hard rule on the difference. In general, speculators are really taking larger bets with higher risk, usually on a shorter time frame. These decisions are generally concentrated to really benefit you if you prove to be correct in regards to your speculation. However, larger losses can really kind of follow if things don't work out. You talked about the restaurant scenario, the question about the restaurant before. During COVID, imagine investing in a restaurant prior to COVID. You look at that from an investment perspective. So we really believe that investing should really take a slow, deliberate plan that really kind of focuses on meeting whatever your long-term goals are and securing your financial stability, i.e. your 401k, your IRAs. If somebody is inclined to speculate, it should be really with assets that aren't critical to their or their family's financial well-being. Money that you could really afford effectively to lose if need be. Somebody should only speculate once you've secured your future, meaning that you've got the financial capacity to do that. I could lose this money in the event, that's okay. It doesn't really affect what we're trying to do. And even if you should be very carefully consider the risk versus the reward payoff. And if the decision will get you closer to fulfilling your financial goals, that's something that you just really need to look at and determine.
I'm so glad you said that because I've been interested in investing for such a long time, but I never know how to get started. I feel like you have to be a psychic in order to know if what I'm investing in is actually going to give me a reward. Dylan, how do you suggest we get started?
Malik, I think maybe you should give Emmett or myself a call, and we can help you get started. But there's plenty of ways you can do research on your own. There's plenty of online resources as well as professionals in this industry. I would really suggest talking with a professional first, and then seeing if that's going to work for you.
So important for sure. And as we know, there are so many different types. And is there ever a way, I'm curious, because sometimes you don't get a reward, right, from investing. Is there ever a way to figure out do you have to invest more times than one in order to see that reward? Or is it sometimes your first investment actually gets you the reward?
Well, we don't know the future, right, Malik? The future is unknowable. So it's really about putting investments together that we can understand the probability of meeting those goals, and then so that no one investment is going to cause us ruin at any one time. So it's about putting those investments together in a portfolio that's going to reduce the risk of coming up short.
And is there a way when I'm doing research on like a company to see if, oh yeah, well, they have a lot of investors already and I've seen they've had a growth in, profit. Is that a good way to indicate if I should invest in this company?
Yeah, and there are plenty of resources online. Again, there's different criteria for every single investment, and there's really no one set strategy that's going to work kind of as a broad base across many different investments. So it's really about defining what you're looking at and what are the goals for that particular investment and how does it fit into your overall allocation.
Good note there. Well, look, if you have any questions about investing, go and see Dylan or Emmett at Bienville Capital Group. You're seeing their website on your screen. BienvilleCapitalGroup.com is that website. You can also give them a call at 504-620-4801 or go see them at 111 Veterans Boulevard, Suite 940.